Well, hello there. Thank you for joining us again in another Ora Valley Community Spotlight. And this morning I have the pleasure of talking with Cindy. She is with Fairway Mortgage and she does reverse mortgages. And there's so many myths out there about this that Cindy's going to share with us, just whet our appetite, and she's going to share with us some of the myths. So Cindy, tell us about this.
Thanks, Karen. I appreciate that. Yes, this program has evolved immensely over the last 10 years. And with that, it has, there were some hiccups along the way, some things that were taken advantage of, and that kind of thing, but those have been corrected. And so there are a lot of safety nets set up with this program. This program is established for people going into retirement or are in retirement to help with cash flow, monthly cash flow. And the reverse mortgage, one of the number one myths is, I will no longer own my home when I get a reverse mortgage. The bank owns it. That is not correct. Just like any other mortgage that's out there, you continue to keep title to that home. If you need to sell it, you pay off your reverse mortgage and keep any net proceeds, just like any other sale. So that's probably one of the one that I hear the most.
Yes, me too as well.
Yes, so no, that's your home. You make the decisions. If you want to remodel it, you can remodel it. I mean, it's your home.
Right.
So it's, but what this does do is it only provides a portion of the home equity. You're not going to get 100%. You're probably going to get 50% or less, depending on your age, the value of your home, and current interest rates. There's 3 different factors in determining your maximum loan amount.
Okay.
So with that, probably the number one way the reverse mortgage is used is as people are going into retirement, the home monthly mortgage payment is their largest item on their budget.
Yes.
And they're looking at their budgets, they're talking to their financial advisor, and they're going, I can't retire, but I need to retire. Maybe it's health. Maybe the industry's changing and they might get laid off. Those kinds of things are happening right now. So with that, if they have plenty of equity in their home, and I can help them determine that, we can refinance their home, pay off their current mortgage, eliminate that monthly mortgage payment. And when I talk about eliminating that monthly mortgage payment, that's optional. If they continue to work and they want to make a payment or send $500 against their reverse mortgage, they can absolutely do that. And guess what? Every dollar they prepay on their reverse mortgage provides them with additional dollars in a growing line of credit.
Wow.
And I personally did that myself when I got my reverse mortgage because I still had a mortgage and a monthly payment. But it was right, and you don't know what the future has to hold.
No.
And that's what's, you don't know how long you're going to live. You don't know what's going to happen with the economy. So talking to my husband and I, we said, you know what, let's do it. But, I continue to work. I love what I do. And with that, when we had extra money, we'd send a check and prepay. And now I have my reverse mortgage down to a small amount with a growing line of credit that will be available in the future.
Okay, the growing line of credit, that's another topic.
Oh my gosh, and that is just an amazing portion of this loan because let's say you have, at the banks, you have an available line of credit. That's never going to grow, number one. Number two, you will have some kind of payment. Whether it's interest only for the first 10 years or 15 years, and then it goes to a principal and interest payment for a 10 or 15-year term, which then that grows quite a bit. Further, that you'll never have any growth. But with the reverse mortgage, by prepaying those dollars, you don't have to go back and refinance. That money's growing all along, and that
Wow.
grows at the same interest rate plus 0.5% that you're paying on your balance of your reverse mortgage. So
Oh my
right
goodness.
now, you're looking at about 6%.
Wow. That's definitely more than banks or investments or anything can give you.
Exactly. It's just amazing. I mean, that's just one. I mean, eliminating the monthly mortgage payment.
Yes.
Now, I'm only can eliminate the monthly principal and interest payment. Clients will always be responsible for their own property taxes,
Yes.
homeowners insurance, homeowners association dues,
Okay. All right.
maintaining their home, and living there as their primary residence. That's what you do anyway with the mortgage, right?
Exactly.
Yeah.
Exactly.
So it's just like I said, I love it, and everybody uses it differently. I have clients that use it for a monthly income to
Really?
supplement.
Okay.
Because
right.
yeah,
Okay.
maybe they had a free and clear home.
Mm-hmm.
So we set up, maybe the first couple of years we just set up a growing line of credit. They didn't need any money, but now with inflation where it is today, they're going, Cindy, it's getting a little tight. Didn't you tell me I could take a portion of my line of credit and turn it into monthly income? Yes, we can do that. So a lot of times they'll come in and we'll sit down and we'll call the servicer together.
Oh, nice.
Yes, guide.
So
I love to guide.
I say, so you like hold our hands through this
Yes,
process so
I
we
do.
don't get lost.
No,
And that's
Correct.
what I love about you. What I have met
Thank
you
you.
with several times. I've brought a client in to
Mm-hmm.
work with you, and I just think that's awesome that you are right there every step of the way. A phone call, email away.
Yep.
If we ever have questions.
Yep, stop into our office.
Okay.
Yep, absolutely. I love it. It's just so rewarding.
Yes.
And of course, it's people my age.
Yes.
And it's so, we like to talk to each other face to face. It's not all computers and that kind of
Yes.
thing.
Yeah.
And so it's just great. And I always tell people, you have questions, you call me. I'm going to be here.
What about all that information they read on the internet?
Oh, yes. There's just so many things out there. And probably one of the items is it pertains to what happens when the last borrower passes. What happens to my home? I get that a lot.
Okay.
And the answer is there's a couple of options. Whoever you leave the home to, your heirs, the estate, they will have the option to sell the home, pay off the reverse mortgage, and keep any net proceeds.
Just like a regular mortgage.
Exactly. Number two, if the heir wants to keep the home, maybe it's a family home, then that heir would refinance. If they're 62 years of age or greater, they could always, if it was going to be their primary residence, refinance into a reverse.
Okay.
But normally they'll refinance into like a conventional loan and pay off the reverse mortgage
And then they can rent it out or use
Yep.
it income
for the family home. Exactly.
Yeah. Okay.
Absolutely.
Okay.
Absolutely. So they can do that. The other thing that's very unique to the reverse mortgage is, let's say the family, the heirs, the children, the estate, they want to keep the home, but the borrower, the relative, let's say they've lived 30 years beyond, they pulled all their equity out with refinancing and paying off a larger mortgage. They never prepaid anything on the reverse. The economy's down, so the home is not worth what it used to be. And what if they're upside down? Guess what? HUD will allow the heirs to purchase that home from HUD at 95% of the current appraised value.
Oh, wow.
So let's say it was $150,000 owing on the reverse. It was only worth $100,000. Okay, I mean that's probably not, but so that means they could buy it for $95,000 from HUD.
Wow.
Yes.
Wow.
Yes.
So all of this misconception out there about reverse mortgage is definitely myths. And so you definitely need to get the facts. And Cindy here, you can tell her passion. She believes in it. She uses it herself. And so you need to talk to Cindy if you have any questions. She's right here on Oracle Road in the Fairway office. So I will have her information for you at the end of this video so you can get a hold of Cindy. So any last thoughts you'd like to share as we wrap up?
My last thought is I'm seeing a lot of referrals coming in. However, people are waiting until it's an emergency.
Oh.
Karen, they wait until it's an emergency. They've lost a spouse, which means they've lost at least a Social Security, if not a whole pension or part of a pension.
Right.
And maybe they still have a mortgage payment. And the widow or widower doesn't have the income now. They want to get rid of that. But if they would have taken care of it before some emergency happened, they could have gotten rid of that mortgage payment. They could have looked at their cash flow if one of them passed. And we don't know when we're going to pass,
No.
but we have to be realistic. And I'm seeing so much of heartache
Yes.
because things weren't planned. So if I can say anything, please, please, I know it's a hard subject, but please plan to make sure that the other spouse is taken care of. Yeah.
Good advice.
Thank you. Thank you, Karen.
Well, again, I appreciate you checking in with us today, learning about Cindy, and it is timely information, especially as we get in our senior years. And so thanks for watching today, and stay tuned for the next one.
Thank you, Karen, very, very much.
You're so welcome. This is important information. I want to get it out to everybody.
Thanks, it
You're
is.
welcome.